At the end of each financial year, you must correctly classify your earnings under the heads of income for accurate tax calculation. Hi, I am Nandakumar from KG College of Arts and Science, Department of Commerce, Professional Accounting, going to explain you guys about heads of income. Income Tax Act. The Income Tax Act was enacted in the year 1961. It is a statute under which all issues regarding taxation are listed and stated. The Act includes all forms of levy, administration, collection, and income tax recovery. The fundamental aim of the Act is to consolidate and amend the rules of taxation in the country. Under the Income Tax Act, there are 5 heads which are known as heads of income. At the end of each year, you or your accountant is expected to classify your yearly earnings and file under these heads of income as per the Income Tax Act. As mentioned earlier, incomes earned by you during the year are divided into 5 heads under the Income Tax Act. Here's a look at how these incomes are classified. Income from salary, income from house property, profit and gains from business or profession, income from capital gains, income from other sources. We'll see about them in detail. Income from salary. Income from salary is the income or remuneration received by an individual for services he is rendering or a contract undertaken by him. This amount of remuneration will be considered as income for the purpose of income tax only if there is an employer and employee relationship between them. Any payment that is received by a person will be treated as income under the Income Tax Act if there is an employer and employee relationship between them. For the purpose of qualifying income as income from salary, their relationship should be that of master and servant. Meaning of salary. The salary for the purpose of calculation of income from salary includes wages, pension, annuity, gratuity, advance salary paid, leave encashment, fees, commission, perquisites, annual accretion to the balance of recognized provident funds. And the next head is income from house property. Any individual's income from his or her property or land is taxable under the head of income from house property. To put it simple, this head includes the policy for calculating tax on rental income that you receive from your properties. The tax amount charged is not acquired from the amount of rent that is received but rather from the property or land as a whole. If the property is being used for a normal course of business, then the income generated from the rent will also be included to be charged for income tax. All commercially owned residents or properties owned are also subject to taxes. In case you own more than one self-occupied house, then only one house is considered to be occupied and the rest are considered to be rented out. It is an exceptional feature of this head that rather than actual income from house property, earning capacity of house property is taxable. The taxation occurs on income received from both commercial and residential property. Profit and gains from business or profession. Business includes any trade, commerce or manufacture or any adventure or concern in the nature of trade, commerce or manufacture. Generally, business means recurring economic activity. For the income tax purpose, an isolated activity may be termed as business, depending upon the facts and circumstances. Profession. Profession includes vocation. Profession requires purely intellectual skill or manual skill on the basis of some special learnings and qualifications gathered through past training or experience. Professional skills can be acquired only after patient study and experience. The business are classified based on their ownership as sole proprietorship, partnership, cooperative society, Hindu undivided family, etc. Some examples of profession are chartered accountant, doctors, lawyers, teachers, etc. Income from capital gain. When you buy and sell assets, the profit or gains arising on transfer of a capital asset is called as capital gain. You are liable to pay a tax on profit earned. There are 2 types of capital gains that apply on the sale of an asset. Depending on the duration of the time you held the asset is classified as short-term and long-term capital gain. Long-term capital gain. Investments that provide returns over a longer period of time are called as long-term capital gain. All the investments that offer returns in period more than 3 years or 36 months can be called as long-term capital gains. There are some exemptions to certain assets based on the time period. When it comes to short term, it's just the opposite. The essential conditions to be satisfied to charge any income under the head capital gains are: there must be a profit or gain on such transfer, there must be a capital asset, the asset transfers such capital asset. Income from other sources. Any income which is not specifically exempted and not chargeable under any other head of income shall be charged under the head income from other sources. This is the last and residuary heads of income. The list of income which are specifically taxable under this heads are dividend, casual income, gifts, share premium in excess of fair market value of shares, income by way of interest received on compensation or on enhanced compensation, sum of money received as advance. What is casual income? Any winnings from lotteries, crossword puzzles, races including horse races, gambling and betting of any nature or form, card games, game shows or entertainment program on television or electronic mode, and any other game of any sort are taxable under this head. And now let's come to the conclusion. These are the 5 heads of income under the Income Tax Act 1961. All citizens who are eligible for tax payment must abide by these heads of income. If any taxpayer is caught not abiding by the clauses, they are punishable by the laws to full extent. Thank you.